under general financial product advice warning. Also say that trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. No information received from NP Financials will be considered as a financial trading recommendation. So I'll give you another 20 seconds to go through this, after which we'll start our normal class. Alright, all good? Okay, so we'll start with the questions which I got from Sri as well as from Pankaj. Thank you for Sri and thank you Pankaj for sending us those questions. Okay. Let me get this. Okay, I got the questions. So Pankaj is asking, so let me put the questions in front of you. I request to analyze CL crude oil long. So we'll discuss this crude oil, then natural gas, then orange juice, then high grade copper, and then nickel. So let's first answer these questions and then I'll take the questions of Sri Utagi. Sri, anyone is anytime if you have any other questions, so please let me know. So we'll start with CL, which is crude oil long from, he's writing long from 9th of August 2019. So this is the 9th of August and we are here on, the last date was 29th of August. So he is here, he actually took a trade of 9th of August 2019, which is this trade. Okay, so let's see the pros and cons of this trade. We will start with the, we can start with the monthly chart or line chart. Let's do one by one. Let's start with the monthly chart of crude oil. Alright, so as you can see from this congestion at around January 2019, 1919, we are in a uptrend. So let's do this. So let's join this. So this is a uptrend in front of us, and on this one there is no crack and snapback, it just respected the channel and then went up, and now when we speak at the right hand side, and the right hand side is now looking like this. And if we draw a Fibonacci from, this is the price here, which is at 5,506. Prior to that there is no swing low as of now. Maybe the next month, which is starting tomorrow, can form this, can allow this to be a swing low, but for the time being, considering this price as the last price, which is August 2019, we'll go to the last swing low. We cannot take this one because this June 2019 low is 5070.5, which is higher than this 5051.2. So we'll go to this portion and then we'll go here, and then we can see that price getting a support. Actually this month is over now, August, so price is getting a support at 50%, which is 5450.4. So this is the monthly, and let's see the peaks and drops on the monthly. The peaks and drops on the monthly, considering this as the last drop, this is the immediate peak. So in between price is has not broken one, uh, but this is monthly. Then you go to the weekly, and weekly also, if this is the drop, this is the peak, nothing is broken. And we'll quickly see that this is a kind of double bottom. Why a kind of? No, because it is not happening at the bottom right hand corner, but at the same time we will go here and see the peak drop is higher, and this is a little bit lower. And now it has not broken this one. So we'll go to the next one, which is daily. Under daily we'll see that price is in a range. So when price is in a range, our job is to find what is that range, and the range here in front of us is, so from here to here, so this is the range. And we may ask whether price is in the bottom half of the range or the top half of the range. And of that range we can also see that this is a big bar and this is a big bar. And for a moment, if we can change this to candlesticks, and then in the candlesticks we can see this is a morning star, and morning star is happening at a support of this engulfing and this piercing. So if we can follow this, our candlestick study, those of us who have done this, this will be an engulfing, and this will be piercing. So this will be a piercing, and that same piercing and engulfing actually created a range of zone of support, which is here. And because we identified that on the 5th of June and on 12th of June, now we can see that that is happening on a support zone, and this the morning star is happening at the support zone. So that is a valid morning star because it is coming after a downtrend. We must not forget the context. So it is happening after a downtrend, and then when it is coming after a downtrend, we need to see that it is happening at a support. Yes, it is happening at a support between engulfing and piercing. And then the third thing is it should happen at the bottom right hand corner. So it has happened in the bottom right hand corner. So when all these three contexts are satisfied, then we are happy to see. We take this as a candlestick reversals. No, not this one, not this one, but this one, because the context is right. Clear? Question? Question?
Clear. So far clear, sir. No problem.
Fantastic. So now that that is clear, we need to identify a couple of big bars which is happening at this point, and this concept is very important to understand. On this reversal point after 7th of August, which is a valid one, this is a valid morning star. So I'll write valid morning star. So candlestick can become very successful if we remember the context and the definition. So context we got right here, and definition we got right here, because this close has to be above the high point of this one. Actually, so that is also satisfied. So the definition is also satisfied. Once that is done, our job is to find out a couple of big bars which can be immediate support. So let's see this as consider this as a big bar or candlestick,
Sir,
whatever it is. So
just a question, sir.
Hold on, yeah, go.
Say after this valid of morning star,
Yes.
yeah, I mean the third bullish bar. Still,
Yes.
do we need to use or wait for high taken out of that third bar?
If it is happening at the 3, if the context is
Yeah,
100% satisfied, then no.
yeah. Okay,
You
okay, got
can
it.
just
Okay.
enter at the close of the bar or candle. So what Sri is asking, if this is a valid morning star which is happening at a support of piercing and engulfing, and after a downtrend, and
Mm,
at a bottom right hand corner, then whether we should wait for this high to be taken out by the entry amount, or we can enter at the close. So I would say if the context is getting 100 out of 100 and definition
yeah,
is
yeah.
getting 100 out of 100, then we
Mm,
can enter at this uh,
close,
close.
close. Okay,
And
good.
considering this as a big bar,
Mm.
did I answer your question, Sri?
Yes, sir. Thank you. Thanks,
Okay.
sir.
So we considering this as a big bar, what we will do, we will actually draw the body and the actually the body open and close and extend it,
Yeah.
and then we got another one big candle, so we'll extend that. So what we'll do, you can do in your mind's eye, or you can do physically just like the one I am doing.
Yeah.
So this first one, let us color it a little bit differently. So this is the first big candle, and then the second big candle, let us do this. So this is the second big candle. So why I am doing this, just to tell ourselves that although this fellow came down, it did not close below this big candle body. Alright.
Yeah.
And
Yeah.
second is, although this fellow came down, this fellow did not close below the big candle body. So these are important points. So if you are buying here, for example, if you are buying at this point or buying at this point, considering this as a harami, which is valid, which is a valid harami. So if you are buying at this valid harami, or buying at this valid morning star, so we should wait whether we should get whether we will be getting panicked here, or will be getting panicked here. So how not to get panicked? You draw a box which is the body of the big candle, and then another box, support box. These are known as support box. So so we'll draw another big one, and remember, when you are drawing that, no one like this fellow should not close below the body, and if this fellow
Yeah.
has closed below this body, remember our discussion, it can break one, it cannot break two. So that discussion means,
Yeah.
if this is
Mm,
if this is the first big candle from the right, and if the second big candle from the right side, then it can break one, it has broken one, yes, and the low taken out, fine, but it cannot break two, so it has not broken the second candlestick's body. So in that way we can be actually confident that we are holding on. So Pankaj's questions on what to do on the ninth, I think this is the ninth, yeah. What to do on the ninth candlestick when the signal also came. So if we see the signal,
mm, mm.
yeah, signal also came on the ninth, as you can this fellow, as you can see this one. The signal also came on the ninth, and what to do? We are hanging on to it, we are hanging on to it because uh, it has not broken one, and it has not broken two. So from this structure it can be possible to have a weekly, nothing there. I was looking for any head and shoulder, I don't think there is any. So we'll be going for another one like this one here, maybe a double bottom, not a good one because it is not happening at the bottom right hand corner. So there is nothing on the weekly front, and there is nothing on the monthly, so only thing which is there is on the daily, and what is there on the daily is the big candles are supporting as behaving as a support, so we should hang on. And when we are hanging on, how far we can hang on? So we can hang on till this point, which is 5804, which is the first touch of, which will be the first touch of the Bollinger Band, if you remember, which will be the first touch of this Bollinger Band. And we say in a downtrend, for example, when the peaks are coming down, troughs are coming down, in a downtrend, the first touch of the Bollinger Band can be a possible reversal. So there is a possibility that if the price touches this fellow Bollinger Band, this is the Bollinger Band in front of us. So this is the Bollinger Band in front of us. If the price is touching on the Bollinger Band, there is a possibility that price will come down, because that is a very high probability trade setup. So if you are long from here, then possibly touching the Bollinger Band, you can wait to see whether the close is above the Bollinger Band and high taken out. In that case, we will continue to hold on. But if not, if the close is below the Bollinger Band, then possibly we will be getting out, because it is also the channel high. So if you remember what we saw in the last, when it touches the channel, upper channel, it actually price came down. So similarly, price is touching the upper channel, there is a possibility of price to come down. So that is on the crude oil 9th of August long. Do you have any question?
Sure.
All good?
So question is,
Yeah.
what is this? How you drawn this channel? Yeah, the start of the channel. It's basically the setup here is relative divergence, bearish relative divergence.
Correct.
Yeah. Then when I come here, what is this? June. Yeah. So this is the from start to here. It is impulsive, bearish impulsive.
On this one, 4th of June.
Yes. Yeah, 4th of June. So up to that point, it is a bearish impulsive.
Correct.
Right. Then from here, from what is it, the next the date is after June 8th.
This one.
Next one, sir. Next towards right. The top of the okay, next one up the top of the channel. Yeah. So up there it is a Fibonacci 61.8.
Yeah.
So the price has reversed from 61.8.
Yeah.
So from here it gives me only to go bearish from here. So which has done exactly the bearish up to this point. Then it has made a double. It has made a support.
Yeah.
But again, it's resistance to the bearish.
Yeah.
Yeah. Then it has given us a buy signal.
On 14th of July, it was a sell signal. Yeah.
Yeah. 14th of July, that is a sell signal.
Yeah.
So from there, it is a it is a downward. It's a corrected. It's a bearish. Corrective. It was a corrective move towards the long, and then it is a bearish started. So again, it has started its original bearish move.
Yes.
Right now, at the 9th of August, yes, it has given us a bullish signal, but it is again a corrective towards a bullish.
Yes.
So we are buying against that original trend. I mean, if we are going for long.
Complete.
Yeah. So of course, I mean, because I took this trade on the demo trade, and I took a long and my profit target is still was up to this point.
Up to which point?
Where this target was the previous peak,
This one, yeah.
August. Yeah, that one.
5882.
Yeah. So there I was expecting a resistance. I mean, based on the left side, it is a resistance here. It is. So if we are going, if we are expecting a long, I mean, from here, from this point onwards, I think I felt that is against the trend.
Yeah, she is asking whether this long, whatever we are discussing from 9th of August, is a impulsive long or a corrective long. Unless and until, to answer that question, unless and until the peaks and troughs and the P star and T star are well established, then till that point it's always a $1 million question whether the trend is up or down. So if we have analyzed the way we did here, that this valid morning star and valid harami is actually appearing at a support and then actually appearing at the bottom right hand corner, and the third one is actually happening after a downtrend, then possibly you can say yes, that's a possible reversal. And unless and until it can break one and break two, all those rules, so it can break one, it has to break this one, and it has to break these two. So unless and until this one and two are broken, then we would say what you said correctly is we would be in a corrective up move. Yeah, that's correct.
So what I'm trying to, I mean, my comment here is this is a valid morning star, absolutely correct.
Yeah.
But it is coming at the intermediate support. So it is not a full support, but it is an intermediate support, and it is a corrective long move.
Yeah, that's correct.
Oh. Yeah, that's.
Yeah. Any other question?
And I think that's why, I mean, that is why you can see that the market is ranging.
For what?
Because it is the price has bounced from the support, I mean intermediate support, and it is in the range.
Yeah. So Sri is saying if the start sorry, if this trend is happening at an intermediate stage, for example the start of a uptrend, not in a established uptrend, sure it can actually be in a range. That's what it is indeed, in a range. Yeah, that's correct. So can I move on to the next one?
We can move on.
Okay. So the next is natural gas long. So he's asking natural gas long. Natural gas long. Yeah, natural gas long on 30th of July. Yes, that is the one. And is writing crack and snapback entry from support formed by low of 26. So is this one. Alright. So what is saying that there is a possible crack and snapback on this support which has happened. So let's see that. So maybe he is right. So it cracked through the support of this 20th of June natural gas, and immediately reversed back and again cracked through with a bullish bar, not a bearish bar, and then snap back after fighting for 4 days, and now it has snapped back to the upside. So what we are seeing here is, let's start from the monthly. So yeah. So immediately we'll come to know that this was the first big candle here, which body is
Yeah.
immediately taken out. Can you see that? Immediately taken out. So that's the break. So now go to, so in a monthly what we are seeing, because we are at the price level of 2284, and if we draw, and it is a kind of hammer. The hammer should not have why a kind of hammer? Because the context is right. It is appearing at the bottom right hand corner, that context, and then it is appearing after a downtrend, so that is another context. So after a downtrend, and it is appearing at the bottom, not exactly, but very close to the bottom of the right hand corner. And the definition is also not very clear, because from the definition we can say that this is having an upper week. It should not have an upper week. So what we can say, that if this is the head, this is the right shoulder, but not yet, maybe next month end, and this is the left shoulder. What we can do, we will wait for this candlestick to break this one. So it can break one, and this one and break two. Okay, and it will also formulate a valid head and shoulder. Did you see what the head and shoulder?
Yes. Yes.
Okay, so we'll go to the monthly, weekly, sorry, and in the weekly we see Morning Star and then Elgolfi, not much. We'll go to the daily, and in the daily, what we can see is it has not broken one yet. So it has not broken one yet, and this is one, and then this is two. If 1 and 2 are very similar like this in front of us, then we will go for this one as the 2. Okay, so it has not broken one. When it has started breaking the first peak, then we'll use this one. Unless and until it is breaking the first peak, don't you start using the channel. Yeah, so let it break, let the price break the first peak. So to answer his question on this, natural gas long from 7/8/2009. So this is the one. I would say same problem here, because this is the downtrend, as we can see. So this is a big time downtrend, and the downtrend has started from 14th of November last year
Yeah.
till date. And so we'll adjust this channel and make this channel maybe a 0.618, so that the bottom and top are matching. Yeah, 0.618 is okay. So what is happening here, this is a downtrend, and the problem is with this long is the price has already touched the Bollinger, and price has already touched the upper channel. So if we see from this point, which is 14th of November, it never touched the top Bollinger, neither it touched the top upper channel.
Yeah.
So now that it has touched both of them, it can be a signal to quit the long trend which we have taken with a small profit. Or if we want to wait, then we'll wait for the close above the Bollinger, above the Bollinger and this pivot, which is at 2327 or 2330. Yeah, 2330 next month pivot, and we can book the profit. So wait for to conclude this fellow. We need to wait. We need to wait for this close above the Bollinger or above the pivot and then high and taken out, or below like now and low taken out. So that is my understanding. Your question?
Yeah, that's correct, sir. I mean, at the moment, the price is at its resistance because it is touching the upper Bollinger Band.
So if you have taken the trade on 7th of August, what you will do?
Yeah, I take profit. I close it at the moment. I mean,
Selvin?
I will still wait for the bearish reversal.
Yep.
Because so far nothing has presented to me to take the or close the trade. There is no bearish bar. There is no short signal, but only indication is saying that it has touched the upper Bollinger Band.
So you'll wait.
I will wait. Yeah.
Selvin?
I will get out now, Pata.
You'll get out here?
Yes,
Yeah.
it's making lower highs and lower lows.
Yeah.
It's in a downtrend.
That's correct.
You are lucky to have made it to this far.
Isn't? Yeah, absolutely. So if yeah, both are correct. And if we draw what we learned today, we can do it in 2 days. We can do it in 1 day, as long as we are seeing a big candle or a big bar. So let's see this considering this as a big candle or big bar. We'll draw this body and see there were initial crack of that body low, but after this point, 14th of August, it has not cracked anymore. And if we increase this to 2 day, let's see what the 2 day is telling us. 2 day big candle was this one, or a big bar is this one on the bullish side. So 2 day is a little bit clearer. It never closed below. If this has closed below, the low is not taken out, and so on and so forth. Yeah, so that big bar can always help us. And to the other one, if we draw this, if we consider this as a big bar, which is on 1st of August, bearish one, we draw this rectangle in front of you, and let us mark that in red. Yeah, and not a single bearish candle like this one here, 21st August, closing below that body. So the body is actually supporting. So big bar doesn't matter whether it is a bullish or bearish. If you make the color as neutral, then it becomes neutral. We need to see only the body of the big bar, like this fellow body, this fellow big body, and then we see what is happening to that body. Market participants are respecting to these levels or not. As long as they are respecting to those levels, that's fine. And interestingly, this actually can happen not only in 1 day, 2 day, but in any time frame. For example, if we go to let me show you in a 5 minutes chart. If you are doing, for example, indices trading with us in a 5 minutes chart, and that session starts at European session start at 17 Melbourne time, which is 5 o'clock. 5 o'clock, and the first bar on the 5 o'clock is this one, and then this is the big bar. This is, remember, this is 5 minutes chart. Yeah, so this is a 5 minutes chart, and this is a big bar, as you can see. from all this previous one. That is the biggest one. And if we draw this body, if we draw this, if we see the body, support, big bar body support, if we draw, we'll be convinced, and we'll be actually getting confidence to hang on to this long trade as long as this body, because our support, our stop loss would be somewhere here, low of that and low of the previous peak, maybe this fellow. Support will be there, we'll get confidence that as long as this big bars body is holding the move, we can actually hang on. Again, this is a big bar. Big bars are always relative, so relative to last whatever is in front of the screen. So we'll draw this one, and let's move on. It has supported the price, and this, after that, this is the big bar, and this is not big, but mix things happening here. So we may get out here, and that will be a profit of 73 pips against a stop loss of 51 pips. Yeah, so this way we can actually, yeah, so that big bar is actually broken there, actually get confident. So this is broken here, yeah, so it's broken here, so I can get there, we can get out there, or we can actually get out, here. So it doesn't matter where we are getting out, so result is almost the same whether we get out here or there, almost the same. So this big bar is actually very helpful. Let's see another example, maybe previous one, which is 29th of August. So big bar body, first identify the body. So to start with, we'll start with this one, which is a big bar, the body is here. Then another one, big bar, the body is here. And hang on to your trade, don't do anything. Remember, I'm doing it very in a very short time frame, 5 minutes. And then this is the big bar, and you can actually close the trade here. Yeah, so it doesn't matter what time frame actually we are doing it, 2 day, 1 day, 5 minutes, 1 minute, the concept of big bar is actually the same.
Yeah.
And we'll go back to our natural gas. Alright, so any question on natural gas?
Yeah. And I have no questions.
Selvan?
My idea is that this thing is in a downtrend. I wouldn't be going long with it.
Yeah.
I'd wait next bar. If it's a down bar, I would be shorting it.
One other thing I think we all missed here is the you are becoming professional. Yeah, is the gap here, which is a support. Gaps are always meaningful. Gaps happen for a reason, and this gap is happened actually for a bearish trap. We say this is a bear trap. Why bear trap? Because as you said, Selvan, this is in a downtrend. Of course, it is in a downtrend from long time, and from November 2018 it is in a downtrend, and these gaps can be actually very challenging ones. In like this one, the last one happened here on 28th of December, like this one here. It people may think, if we forget the right hand side, because no one knows the right hand side, if we hide the right hand side, yeah, then it may appear as a island bottom. If you remember our candlestick discussion, island bottom, and this gap here is a breakout gap. Yeah, it has broken this, yeah, it has broken this. So this is a breakout gap, and this is an exhaustion gap. So this is an exhaustion gap there, with a big engulfing exhaustion gap, and then there is a continuation gap, and this gap may appear as an exhaustion gap because it is appearing at a support. So this can be decisive, and this may not be decisive because we need to wait. So this structure is absolutely resembles with a island bottom, but this low has to be this high has to be taken out, and what happened, high was not taken out. And now at this point what we are saying, we are seeing another gap, and for a change this gap is actually an exhaustion gap because it is coming after a very big downtrend. And more importantly, why this is an exhaustion gap? Because the gap is filled in immediately, but price is not coming and closing below that gap. So that can be another pointer to consider this as a long if we are believing that this trend of downtrend can change, and it is probably taking changing now. For that actually we were long from here, as you can see, and we are also sorted there. Alright, so I think that's, yeah, you are right, it's in a downtrend, but trends get changed every now and then. Trends get changed, as you can see, and if there is
I
a
would wait for the trend to be confirmed.
yeah,
If it changed, I would wait for it to be confirmed, changed, then I would go long.
yeah, yeah, that's the correct thing to do. Wait for the confirmation of the change in trend, then go long. Yeah, I think
It
that's the
hasn't
best.
broken any significant highs,
Yes, it has not broken any significant high. Absolutely
so I would
correct.
not be longing it.
Yeah,
I
so
might just be cautious, but I would not long it.
yeah, that's correct. Very good.
If it broke that high there, now the one that you got,
Yeah,
if it broke that high,
yeah,
I would consider going long.
absolutely correct. Yeah, that's
You
correct.
draw a Fibonacci from the previous high,
Yeah,
you'll see,
from this one.
yes, you'll see it's got that, if that's your AB,
Yeah,
and then you go to, what's that, 61.8?
that's a
Went
61 point.
exactly to 61.8 and then came down.
Yeah,
Then you got your new AB,
yeah, this one.
yeah, your new fib.
Yeah, again
Now it's
61.
exactly at 61.8
Exactly correct.
retracement.
Yeah,
So
true.
I would not be longing it. I'd be
Very correct.
thinking in terms of a short here. If I saw a short signal, I would go short here.
Hmm.
It's retraced exactly to the 61.8 and
Isn't
it's
it?
it's hanging around there. So
Yeah,
if it breaks that and gives me a long signal, I would wait until it breaks the previous high, the previous 61.8, and then go long.
yeah, very good. Excellent. So those of you who could not heard what Selman said, brilliant analysis on the Fibonacci. I think Selman, you are doing Fibonacci a lot. That's good. And what Selman said, the previous high actually exactly stopped at this 61.8, and now the price is again stopped at the 61.8, which is the inverse of the golden ratio of 1.618 or 161.8 if you multiply that by 100. Right. So what he is saying that the price, since price is stopping at 100, sorry, 61.8, then there was an opportunity to go short there because it touched the Bollinger Band for the first time after a short run. So that was an opportunity to go short. And another one actually as we speak is happening right in front of us. Second time it is touching the Bollinger Band at 61.8, so there can be a short opportunity there.
And
Very good.
that bar there is Harami. Current bar is Harami.
The current bar is a harami. Yeah, that's correct. And even if we change this to a 2 day, we are seeing that it is touching the Bollinger Band. Yeah. All right. The next question: orange juice long 25.8. Orange juice. So we'll go to orange juice. We'll start from our big term monthly. Orange juice long 25.8. 25.8. Alright, sorry, this is actually it should be daily, and then we'll go to this oranges to monthly. Interesting. Just can you yeah, it's a big term, long term. It's very tremendous range, isn't it? From 1978, it's a big one, but it's a range. All right. So what we are, why we our immediately attention went to that big range because we need to see whether we are at the bottom of that range, top of that range, or what not. So we see we are at the middle of that range, and he's right long. Okay. So for the first time we can see this is on the monthly chart. This is over sold. Yeah, so as it happened here and here, oversold, as it happened here, oversold. So if we write oversold, uh, and copy this to this one here, and most probably this one. Did it close below Bollinger for 481 590 or no? This fellow close. So these are the oversold position here on the monthly chart. That is the only thing which I can say. And it is stopping at this. Not really. It is. I think now it is started to become a resistance. So what I have drawn the prominent body close and open one. Like this is the close, and this is the close. So two previous or three previous closes. Then what is happening now? Out of the 5 months, 4 months actually closed below that previous low closes. So it is down as per my understanding. Then we'll go to weekly. So weekly, we saw one higher low, but it has not broken one here, which is here. Then we'll go to the 2-day. In the 2-day, if we consider this as the bottom and this as the first one, so it has broken this one, but it did a crack and snap back. And what is happening? It is making a higher drop and then meeting the Bollinger Band. So this is a downtrend, as we can see from at least this point. We can say
Yeah, come. I think it's time to go.
17,180, and from that what is happening is we have seen the first touch of the Bollinger Band, which is bearish, because in a downtrend the first touch of the upper Bollinger Band actually gives us a bearish signal. And then we'll copy this and paste it here to get the same effect, and we copy this a third time, and this may be the fourth time. Generally when the number increases 1 2 3 4, the intensity reduces. The first one is very high probability, maybe 75%, second one maybe 60, third one maybe 50, and so on and so forth. Now if we go to the date, he has sorry, one more. We'll do the 1 day daily, and daily we can see a big engulfing at the 11,000 and at the top Bollinger Band. So if this is a downtrend, as you can see, this is a downtrend. The first touch of the Bollinger Band, which I said can be 75%. You have to do your own back testing. So this is 75%, and then success first time, and then second. This is the second time. So which may actually try to reverse the price. So what he did, he went long on 25th of the August. So 25th of the August, I think he went long here, 25th of August. And what did you do now? if you are long from here on the 25th of August, which is this one here. Yes.
Short. Sir. I will go for short.
Why?
Okay. First thing is got a signal, and second thing is got a gap at the upper Bollinger Band, and what the price? I mean, as per my analysis, is it has started, and if it's a downtrend, and it's a rising flag.
Downtrend flag.
In a downtrend, it's a rising flag or a wedge.
So Sri is
So,
saying he will go short because
sure.
he is considering this as a flag. Is it? Is it?
Yeah. I mean,
If
the
that is a
flag from
flag,
the below.
if that is a flag, then this is a flag to the upside.
Yeah, I consider the flag. I draw the flag from. Can I see the screen?
Hmm. Please come close to the mic so that I can hear you.
Yeah. The uptrend. The first.
May, in the month of May.
Yeah. In the month of May.
Yeah.
And the previous. Okay. Then I joined May,
Hmm.
and the latest swing low.
Hmm.
Latest swing low.
This one.
Then
19th August.
yeah. So I draw a line from May to the 19th of August.
Trend line.
Yeah, trend line.
Hmm.
Then from the June swing high.
This one.
Yeah, that's good. That's a trend line. Yeah, that one. Yeah, do that. And if you
Actually, you
consider
cannot do this one because the last bar has not formed a swing high.
Okay, then
So this is actually an invalid one. This is valid.
the previous one.
So if you join this one to this one. Is it? This way?
Yeah.
Yeah, I
Or
don't
the
know.
next one. Yes, that's the one. That's one. So this is the wedge, and if your prevailing trend is a downtrend, all the way to the October. So it's a prevailing trend. It's October, and it's a rising wedge. So because I haven't seen any, the valid support. There is no head and shoulder, inverse head and shoulder. There's no double top. The price is going up, and it has experienced a resistance at the upper Bollinger. Now it is going to be. I mean, it will. There is an indication that it's at the exhaustion gap, and the price. It is setting a bearish moment.
Yeah, so I'd say I'll probably what he's saying, Sri is saying that this is a rising wedge in an uptrend, sorry, downtrend, which is a continuation signal. So my understanding would be probably a little bit different, and that can be. I would draw if this is a downtrend. If this is a downtrend, then if this is a rising wedge like this, then there is a possibility that the trend will go down. But this is not quite that way. But anyway, Sylvan,
I would draw a trend line, Partha. All those three pink dots you got there, I would draw a trend line
trend line
from the first high,
from
maybe
the
go to weekly,
weekly. Yeah,
draw a trend line down that way,
from this one
join
to
those highs here.
yeah.
Yeah. Now, price has touched that trend line,
Mm,
and also perhaps your Bollinger Band at the top there.
mm,
So it is possible
mm,
on a 2-day that
mm.
it could reverse.
Yeah.
But the problem with that theory is
Mm,
you are on the weekly.
mm,
No, go back to weekly.
mm,
The weekly is a swing low.
mm.
It's a
Last one.
morning star. It's a morning star, and it
Mm,
is a higher low than the previous low. Price was making lower highs, lower lows, lower highs, lower lows.
mm,
Now it has made a higher low.
mm,
So I would be concerned to go short here.
mm.
I would. It could be a reversal
Yep.
because the last bar on the weekly
Mm.
is a bullish engulfing as well.
Yeah.
So I would be cautious about going short here,
Yep. Correct.
basically because of bullish engulfing and the swing low
Yeah.
that is a higher low than the previous low. It may be a change in direction of the trend.
Yeah. Yeah. So if you remember our three white soldiers like this one here, nowadays they have become green. So one, two, three, three green soldier with a higher low and then engulfing. So I would say yeah, probably there is a possible change in trend. So and then if we go, that's what Selvan said. And if we go to the line chart here and make it 105 because the price is at 10,500. So from there also we can see yeah the long term downtrend, a very long term downtrend, and that long term downtrend can actually reverse because it has printed a higher low. That's what Selvan said, and it is now like this. It is now like this, and the break has happened there. So I would say this is a up trend. This is the up move,
Possible uptrend,
isn't it?
a
This is
possible change of direction,
yeah,
possible.
that's it. Yeah, and
Again, I would wait for the previous high,
yeah,
the significant high to be broken
yeah,
and to retest on that as support and then
yeah,
go long.
yeah,
I would wait.
yeah,
Right now, I would wait. I would not trade it.
yeah, yeah. Very good. Thank you, Selvan. Thank you, Sri. And to go back to our 2 days, if you are long from anywhere from here, that's what you mentioned, 25 of the 8th. This is the one. So considering this is the trend is not confirmed, then possibility of booking the profit here is I think good way to exit the
No,
trade.
if you're long here now at the moment, I would stay long until you got a bearish signal.
Yeah, we got already possibly a bearish here.
No, you don't. That's an up bar.
Up bar. You need to wait for the low of the high up bar is taken out. Yeah.
Yeah. If
Okay.
if the low of that bar is taken out, then yeah, you got to swing high.
Yeah. Yeah. Yeah.
In a downtrend, that would
Yeah.
be a short signal.
Yeah. If we convert that into a daily chart, so this will be an engulfing here and a big one. So either wait for this low to be taken out
Yeah, but if
or
it's in an uptrend, you've
mm,
also got a gap there, which could
mm,
be a continuation gap.
yeah, true.
Okay?
Very good.
But
Fantastic. Yeah.
even though you've got an engulfing,
Mm.
it doesn't mean that it's going to go short.
No.
If it's in an if it's now broken the downtrend,
Mm.
I would wait for the next bar at least to give me some sort of an idea
Mm.
which way this is going.
Mm. Yeah. Because see this
I
all
wouldn't trade
this
right
yeah.
now. I wouldn't trade it.
Mm. Yeah. Because
It's not telling
all
me anything.
yeah,
It's
that's
not telling
correct.
me I'm going this way or I'm going that way.
Yeah.
I want you to first talk to me and tell me I am going this way. When I'm going this way, then I will follow you.
Yeah. I think yeah, that's a confirmation bias. Not bias actually strategy which we can follow. that let the market decide, get confirmed, and let the market tells us that whether C is going up or down, then we will follow. But as of now, there is a tendency, possibility that the downtrend is broken and with a breakout gap. So there is a confusion here because it's an engulfing and a breakout gap, and in the 2 day it has touched the Bollinger Band, so probably we'll wait. And the next one he's
If you
saying,
go to
yeah,
weekly,
go.
Father,
Hmm?
if you go to weekly, that's a
Weekly,
bullish engulfing.
isn't it? That's a bullish engulfing of a higher low.
That's right.
Yeah.
So if you thinking of going short,
Hmm.
well, good luck to you. I wouldn't go short here.
Hmm.
Not the bullish engulfing like that. Even
Hmm.
though it's got a long week, it's
Hmm.
it's just it's testing a resistance. It's almost like a head and shoulder pattern as well on the weekly.
Hmm. True. Very
So when you
challenging
put
one, this one. Hmm.
when you put a higher low like that,
Hmm.
I am very, very cautious about
Hmm.
going short.
Yeah. So those of you who could not heard what Sri and uh, Selman said this is a higher low in the weekly time frame, and a possible right hand shoulder compared this as a head, and a higher low, swing low with an engulfing is not a very good signal to go short in the lower time frame, like today. This one again a higher low or a 1 day. The difference between this one with a higher low and the previous one which we discussed on the natural gas. So let's see side by side. So let's make the let's keep this as orange juice. So we'll keep this as orange juice in a weekly chart in front of us with a high low and engulfing, and the other one will make it natural gas and see the difference. So we'll unlink it and make it natural gas. Yeah,
Mm.
so the natural gas has not made a higher low, if you can see. That's the major difference between these two. The orange juice has made a higher low, as you can see, but the natural gas actually had made a lower low.
Father, another thing, if you
Very
put the
good
orange juice
observation, Selvan.
on a daily chart, put the
They
orange juice on a daily chart,
will put
you
the
will see
orange
that
juice in a day.
the gap broke past the resistance.
Yeah, he's saying the graph has broken past the resistance here. This one, I agree. I agree with
Maybe
that.
it's come back to test the resistance on the daily,
It did
but
actually. It did actually.
yeah, so
Mm.
the next bar can give you some sort of an idea where it's going
Yeah, yeah,
on the daily.
yeah. Very good.
But on the weekly, it's telling you is bullish.
Mm. I mean, it has tested. I think daily is also telling us bullish because it has tested. Unless and until it is cracking, but we got some support from here to here already. So
Yeah,
it has broken, retested, and went up.
yep.
Nothing has
I
happened
would
of
be
that
longing
sort.
this thing.
Yeah,
I'll wait for
nothing
the
has
next bar to
happened
tell
of
me
that
which
sort.
way it's going and I'll follow it.
Yes, that's correct.
That would be a good trade to get into if it goes long
Mm. So
because it's coming off the
Salman,
bottom
yeah.
of a
So
downtrend.
yeah. So Salman is saying we have picked up a bottom of the downtrend, and that can actually result in a good opportunity to hang on, because everywhere we saw, including the day, weekly, and the 2 day, it formed a higher low and a engulfing. Well, the natural gas actually did not form a higher low, only a
It may do
modest.
so later.
Yeah,
If it's going to go
yeah,
long, it may do so later.
yeah. And this can be a little bit of double bottom at the natural gas, because this low is lower than this one. So if we consider week number 25 and week number 32, week number 32 low is lower than the week number 25.
That's
So
right.
that's a double bottom possibility, but it has to break this fellow, yeah,
Yeah.
to be a confirmed double bottom. It is 1031, but yes, very good, excellent participation, Selvan and Sri, to answer to discuss Pankaj's question. Any other question on these two, orange juice and natural gas?
No, all good.
All good.
Yeah.
We'll go to next one, which is HG,
High grade copper.
high grade copper. So on the high grade copper, what he is saying, uh, 25.8, so the 25th of August, this one, it is testing low formed on 14th of August 2018. So he has gone back to 2018, 14th of August. Yeah, this one, not really. Alright, so then it has tested that low few times. Yes, agree. And then he's writing, now it has given relative divergence. We'll see that. Crack and snapback and turning point at the level from August 2018 low. So he's talking about a low which is August 2018. This fella, low there at the point of 25,595, 25,595, and based on that low he is saying crack and snapback. Not yet. It actually did a crack but not a snapback, again a crack. So this is the second time crack happening here, and it is saying relative divergence. So yeah, that's correct. It's a relative divergence here and a turning point. These three are turning point, as you can see, and high of that turning point is taken out. Yeah, that's fine. So what do you think of this one going long from 25th of August? The weekly in front of you and the 2 day.
Yeah, it was clearly set up for the long term.
Clearly for setup for long. Why?
Right. First is bullish relative divergence, and it is coming from the support,
You mean
which
this
is
one?
2016. Sorry, 2018 August.
This one?
Yeah. Yeah. No. It's that one. That one.
Hmm.
Yeah.
It has closed below low taken out. Okay, go. Sri?
But on the weekly, it has given us a turning point.
Weekly turning point. Where?
Sorry, not weekly. On 2 days.
Hmm.
On 2 days, it has given us a turning point.
2 day turning point. Yes. This is the one. Yeah.
This is weekly.
This is the one you're talking turning point. Yeah.
Yes.
Hmm.
Yes. Yeah. And there is no buy signal. We are on the buy signal, and up bar. So there is no reason why to go for short here.
Alright. Sri is buying because he's saying there is a support from 20 August 2018 as Pankaj did. and he is seeing two up bars and he is bullish. Selvan?
I think that there is a possibility of it going long
Why?
because of it's got a zone of support there around that from 2018. It's got a zone of support there, but it seems to be making lower highs and lower lows. So I would be cautious about going long here.
Mm.
It it has closed just below a previous support.
Mm.
Yes. So there is another further support just below that. So
24702.
I on the weekly I do not have a turning point. I do not have anything on the weekly. I have a down bar.
Mm.
And I have a down bar followed by another down bar
Mm.
with a turning point to go short.
Mm.
So I would be very cautious about going long here.
Mm.
It would need to break a support and come back and
Mm.
test as resistance for me to go long.
Mm. Yeah.
It hasn't broken. It has it has closed below a previous support level, which
Yeah.
should be a concern for me to go long.
Yeah.
It needs to close above
Mm.
that support for me to go long.
Yeah.
This support.
Mm. Yeah. I'd also be thinking twice or thrice to go long here because this is the actual support here,
Yeah.
which is 24702, because the previous support is broken and low taken out. So all these supports are actually gone now. So this support on 13th of August, low of 25,595, and 31st of December, low of 25,439 is broken by this fellow with a close of 25,301, low of 25,272, and low taken out. Although this is a bullish one, but there is a tendency the price to go up to this point and test this low of 24,702, which is a, I think, a good one. This one.
Yeah, and it's not come. It hasn't touched the Bollinger's yet.
Yeah, it has not touched the Bollinger Band. And if we draw the long-term Fibonacci from this point, which is 11th of January 2016 at low 19,381 to this high, which is 33,214, which is on the 18th of December 2017, the actual support is at 24,665. This is the one which we have drawn. So I would probably not consider this as any support. So I'll wait for this fellow to test this 74,702 or 2665. 24,702 and 24,665. These are the two supports, I think, before we may consider this as any long. Yeah. So if that is the
If you went
case,
long here, where would you put your stop?
if we are going long at the 24,665 level, then we'd
No,
go
no, no.
uh,
If Sri goes long here, where would you put his stop? At the bottom of this bar, the current
see
bar.
Yeah. No, I will put this 24,665 minus whatever the EDS.
24,665 minus 272. Yeah.
Yeah, that would be my stop.
It would be a very big stop.
Yes. Okay. So if we are, I would not take long. So probably I'll wait for this support to be taken 20, but 24,665. But if you have taken long here on this signal of 25th, I would say if this low is taken out, because the crack and snapback is not holding, this is a crack and a snapback, this is a crack. If the snapback is happening, fine. If the next bar is closing above this blue line and high taken out, that's fine. But if the
Long.
next bar, yeah, but if this last bar is low taken out of this bar, then you should must get out, I think. Okay. The last one he's asking. Okay, any other question on HG?
No.
No. The last question he's asking, for education purpose, can you analyze nickel? Because we don't trade Lincoln. It is double top, so nickel. Let's go NI. is double top. First top, I think it has broken the double top. Yeah, this has broken the double top. So he's writing the first double top 18.4. Yeah, this was the one 4th April 2018, which is broken. It seems to be finding resistance at that level, question mark. No, it's not finding. It has appreciated 6,000 pips from the class A double bottom at 10,738 or 12th of 8 low. This is the 12th of 8. Yeah, so he has considered this as a double bottom, and he's saying it has appreciated sixth, because he probably wrote the this one. No, he had not seen this one. 6,116 pips. Yeah. Now it is the chances of, let's start with the week monthly. Now this is all time high, so breaking this all time high can be a challenging task. So let's go to the weekly, and we may think that this is a double bottom, but not so good, not double top. So then we go to 2 day. Today we are
Can you call it a double top if the second top has been broken?
then we
You
are
can't call it
considering
double top then.
no, we are considering, and
Yeah, no, I understand.
yeah.
But if second high is broken, then it's not a double top.
You mean this high is broken?
Yeah, then it's no longer a double top.
Correct. So yeah, that's what I said. The previous double broken, so that's a very difficult one. And then okay, what is saying? Okay, I would say nothing. We need to wait. What price is showing us in weekly, and
There's no trade here at the moment. There's no trade.
Selvin is saying there is no trade at this moment. Sri.
No trade. No trade at the moment.
Sri says no trade.
Can we see the any signals? The signal chart, sir?
Yeah, this is the signal chart in front of you. Go.
It's a long bar, big bar. It's a big bar closed above the upper Bollinger Band, and
what I would say, probably again, don't miss these things. So this is can be an exhaustion gap here. So what we need to wait is we need to see, is this big bar holding its body? If not, then probably there is a short opportunity if this is broken and low taken out from 16,320. That would be my analysis. And in daily chart also, don't go long at this point because it is at a resistance. So you need to wait for this body to be that body to be broken at around a level of 16,000, and then go short. What do you think?
It could be all sellers out, buyers out.
Yeah, it can be an all buyers out, you mean?
Yeah, all buyers out.
All buyers out, yeah. Selvan is saying is that it can be an all buyers out.
Sir, which is the exertion gap, sir, here? That's the first one, is it? Exertion. Could you identify the exertion gap, please?
Yeah, 2 bars between the 2 bars, last 2 bars.
This one.
Even on the daily, you see it.
Yeah.
Yeah. Okay.
This too. Any other observation here?
What you could do with this one, Pata, is if you go back to the weekly,
Hmm.
draw a fib from the bottom of the uh, chart to the top, from the last time it went up.
You mean this from here?
Yes, that one. Yeah, draw a fib from the bottom to the top,
Hmm.
and you can trade that as a retracement. So you know it have to pass 38.2
Hmm.
to
Yeah,
get to either 50 or 61.8. You know it have to pass
100%.
31.8.
Hmm.
So if you get a short signal,
Hmm.
that's what I would do.
Hmm.
If I got a short signal here,
Yeah.
I would trade from there to the 38.2
Hmm.
minimum
Yeah.
reward,
Hmm.
and at that point I would um, see what it's doing, whether it's going short further to the 50 or the 61.8, and then I'll let part of the trade run, but I would take that part as profit.
Yeah. I think the Selvan is doing extensively. See, that's good because the statements are directing me to the think that way. He's saying that 38, if it has to be retracement, it has to touch the 38.2. I agree. That's the rule of Fibonacci. And if we are getting a short signal here at around 17,800, we may trade up to 15,643 to this retracement level and see what is happening there, and then to
That's
14,872.
about 2,000 pips.
Yeah, that's a 2000 pips trade. Yeah, absolutely. Very nice, excellent, good, good understanding of Fibonacci, Selvan. Good, very good. Sri,
Yeah, very good.
any other observation here?
After such a long up run,
Hmm.
market will be exhausted.
Isn't it? The gaps
It's
are showing that actually.
it's possible that market will retrace.
Hmm.
It may retrace all the way back to 78.6. We don't know,
Hmm.
but have to pass 38.2 to get to any one of the other retracement levels.
Hmm.
And 38.2 is about 2,000 pips away.
Hmm.
And
So
could you draw a Fibonacci from which is a swing high on March to June, sir? So there will
Hmm.
be an extension, and
On the
if it is one
weekly,
on the weekly, yeah,
on the weekly, let's see. And the
March,
date is
March,
March,
March, 2019.
March 2000,
That's a swing high there.
March
I mean
2000.
the peak.
This one to this one, correct?
oh, you're looking for the 1.618
Yeah,
extension.
yeah. Oh, from here to down, yeah,
Yeah.
and
Have I done it
extension.
correctly?
Yes, yes, and extension, sir.
Yeah, it has crossed all the extensions. It has
You've
crossed.
broken everything.
Yeah.
161.
It has broken 161. It has broken
Uh,
You've broken
261,
261 as well.
and the next one is probably the
uh,
333.
and what is the previous high in monthly or weekly?
This is making
No,
all-time
this
high.
is the new high,
New
Okay,
high.
it's all
all-time high.
Hmm.
yeah. Okay.
So it can go anywhere. It
Hmm.
can still go up another bar from here, another two
Hmm.
bars or five
Hmm.
bars. You don't know.
Hmm.
But wherever it goes to, wait for a short signal
Hmm.
and then go back to 38.2
Hmm.
minimum.
Hmm. I think that can be a good trade, but we don't know whether it will go up to 333% or not. No one knows because it is a very big bar.
Yeah.
But it can be in all buyers out. But there is no resistance, so there are so many bars and ifs. So in that case, we have to wait for a reversal in a 1 day or 2 day chart. Nothing has happened yet, and take the trade. So there is no discussion, no trade on the nickel, Pankaj.
Yeah. Yeah.
All right, so we'll go to the three questions.
Trade plan.
What are the Sri is asking? What are the data required for the trade plan, and how to finalize the input data? Using the input data, construct a sample trade plan. Forex and Commodities means what? He's saying that is $1 million question.
Tell you what, so you make the first million, then let me know how it's made.
It's only a question.
Yeah.
Okay, sir. Just
Yeah, go.
the inputs can be, first thing is I should should identify the high probability setups.
Mm.
So what I'm done, high probability setup means if I'm going for a long, it should be uptrend and it should be higher high and higher lows, right? And price should be in the bullish impulsive move.
Mm.
So these are all the inputs, yes. But again, I'm struggling with the trade plan. So I need these are the inputs what I have, but is it enough ingredients to stick the plan?
So you're talking about two. One is the input, and the other one is
Actual plan, actual drafting the plan,
writing.
and yeah.
All right. To answer your first question is both our questions are simple but good questions. Thank you for that. And you are talking about the inputs of a trade plan. Inputs of a trade plan. The first question is nothing but whatever you are trading with. When you said there is a high probability setup,
Yeah,
you have to define what is a high probability setup.
yeah.
So write down whatever it is. If it is a Fibonacci, write down. If it is a double bottom, double top, write down. If it is a turning point, write down.
Yeah.
If it is it can break one, it cannot break two, write down.
Yeah.
That those are the inputs. There is nothing nothing called good or bad input, but whatever the input is, the repetition, I would say the input is not important,
Ah,
because I believe we can enter anywhere anytime. So entry is not a problem or a big thing.
mm.
The big thing here to remember, allow me to drink some water, sorry.
Success rate. Identify the individual setup success rate.
uh, the no, I would not say that. Yeah,
Yeah, okay.
that is required,
Yeah.
I would say consistently do whatever you are doing.
Mm.
Supposing you know your input in the form of what you are saying, gaps, double bottom, double top, Fibonacci, all those things that and success rate, all those are actually
Mm.
so this is like maintaining inflation, like the Reserve Bank of governor of any
Mm.
country. His
Mm.
only job is to maintain or achieve the inflation target of whatever 2%, 2.2%, 1%, whatever it is.
Mm.
And what are the inputs? So if I have to take that uh, similar concept, what are the inputs to the Reserve Bank governor to maintain the inflation? The last input would be the CPI. And how you would be controlling the inflation? By fluctuating the interest rate. So the inputs can be CPI, RPI, PMI, all those data,
Mm-hmm.
consumer price index, and all those things. Yeah. So those are the inputs, and our consistency is like for him is the interest rate. So he can control inflation or try to control inflation by changing the interest rate up or down. Either he would select inflationary situation or deflationary situation, like Japan. There for 30 years, 40 years in a deflation, I don't know the English, deflation, inflation, deflation, yeah, situation. So similar to the journal here is whatever you decide as your input, that should stay the same, but the concept here is the repetition. So for example, we may have different journals. One journal maybe the numbers are not important. One journals can be, and this instrument is not important, so I have hidden the instrument also. time is not important. I have written the hidden the time. So for example, if you are doing intraday trading, for example, this is intraday trading chart, and your dates are there, your times are there, and your inputs, sorry, yeah, entry level, your previous highs are there, lows are there. If you are going long or short, then whether you are going long or short, you are there. Entry points are there, stops are there, and when you are exiting, you write down here. So what you are entering the instrument, the date, time, previous high, low, peaks and drops, low, with the long short entry and entry. So these are the only things which you are entering, and exit is whatever you are exiting. So if this is one of your strategy, then the most important point here in your question is to how to finalize once you have finalized the input data based on your success. You already said those two things, so I'm not repeating those two things. So you have already said that based on the input criteria. I think it's not data, it's criteria, isn't it, Sri? Input criteria.
Input criteria.
Yeah,
Sorry,
input
input
criteria.
criteria.
Based on your input criteria and your testing, you have decided to stick on to the high probability trade setups and so on and so forth. So criteria is fixed. Now you're finalizing, you have finalized the criteria based on the success rate, that is fixed. Once that is done, then comes the consistency. I think the consistency is most important. So for example, if you are getting this type of results and all of a sudden you saw this type of results, so three negatives, two negatives, two negatives, which are three negatives. The challenge here is after getting these results. So let's see for a moment. So for first 10 days you got this result. So for example, so this is 13.414%, which is good, as you can see in the sum. Now next 10 days from here, you got this, which is 3.55, or let's take the worst part, which is this minus 0.57. Yeah, this is a good one. So from 3rd of the 6th to this one, 27th of the 6th, you got a result of minus 0.57%. So the question here is whether you were sticking to your criteria, success rate, and consistently doing the next 10 days or not. So after getting 0.57, if we take the next from 71 to 87, whether you are taking these trades resulting in 1.51% consistently, same criteria, same input data and same selection criteria, and then whether you are taking these two trades which is resulting in 2.28. So from here, remember dates are not important, what I have said, till
Yeah.
this becomes a 3.46. The challenge comes here is what I have seen, people drops off after seeing a minus 0.57 here. They think the selection criteria as per their understanding is poor, and the success rate what they have done is market dependent, not their strategy dependent. So and they change, when they change after this 0.57, they would not get this, they would not get 3.07 and so on and so forth, and they would not get this if this is actually incorrect. So the 14% whatever it is, so this will be 14%, not, yep. So if you're getting this and you got 27%, someone would be thinking, oh, I'm the god of trading. But next few days this type of results may happen in which the result will be minus 0.57 or 5, whatever it is. So my point here is you need to know after you have selected, yeah, these 2 points are extremely important. Input criteria is important, and based on the input criteria, hi Vinod, how are you? Based on this input criteria, the success rate backtesting is important. Success rate backtesting is important. But once you have finalized the input criteria based on the success rate, then the most important thing to know is what are your success of the long, what are your success of the shorts, what are your success on the Monday, Tuesday, Wednesday, so on and so forth. How many are positive trades and how many percent is negative trades, and when if you are going out, what are your criteria of going out? For example, high low taken out, turning point, the reversal, peaks and drops, not much. So only these four: opposite, reversal, peaks and drops, all buyers out, sellers out, turning point, high low taken out. So you should know your percentages. Similarly, when you are entering, whether it is a Bollinger Band or a turning point or blah 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 blah, support resistance, round number, blah blah blah. So you should know all this. So knowing this from a trade journal is important. Knowing this from a trade journal is important. Knowing this from a trade journal is important. Knowing this or maximizing the percentage one versus the average loss is important. So there are so many factors which can be derived from a trade journal. Once you have decided the input criteria and the success rate of those individual input criteria, and you have finalized the input criteria for entry, so that is the starting point. Yes, these two questions are very important questions, as you have said, but these are starting point, as you have said, for every budding trader. Yes, but after you are confirmed with this, and this starting point can be anything. Someone can be trading Fibonacci, someone can be trading line chart, someone can be trading double bottom, double top. There are so many of them, and no one is correct or incorrect, or someone would be trading strategies. No one is correct or no one is wrong. There is nothing wrong or correct thing in trading, but the only correct thing in trading and in trade plan is the consistency, the repetition of your selection which you have done through your input criteria based on the success rate of those input criteria. And most important is repetition, and next importance is, because if you repeat you'll get these results, good results, and if you repeat the same thing there can be challenging days as like this, but when you combine like this, then can be a good result. So, and most important thing is knowing your numbers in your fingertips: long success, short success, Monday success, Tuesday success, greater than zero success, turning point success, all buyers out, sellers out success. So if you know this, then probably if you are saying, oh, this is a problem for me, then I would say 0.3%, 0.2% here, and so on and so forth. Did I answer your question, Sri?
Yeah. I understood, sir. Just yeah, I understood. I understood.
Question?
I have no questions.
Partha, can I make a comment here? Partha?
Yeah.
I think the first thing anybody should do before even contemplating taking a trade is find out what trend it is in.
Mm.
Once you find out what trend it is in, uptrend or downtrend,
Mm.
you can have a book. On the front part of the book you write uptrend, at the back part of the book you write downtrend.
Mm.
For all the things that you need for an uptrend, maybe Morningstar, maybe Fibonacci, whatever it is that you think is important, write it in there.
Mm.
And the other side, downtrend, whatever you think is important, evening star, whatever, you write it there.
Mm.
So when you ask yourself uptrend or downtrend,
Mm.
and if the answer is uptrend, you open the front of the book and you look at the uptrend. These are the things that are required for an uptrend. Have I got this? Have I got that? Have I got that? Have I got that? And you can put whatever you want in there.
Mm.
Bullish, engulfing bar, whatever.
Mm.
If you've got sufficient information there
Mm.
and your chart is showing you that this looks like an opportunity to go long, and I've got a support,
Mm.
a strong support is coming off a support, then I will go long.
Mm.
And on the other side, if it's a downtrend, you do exactly the same thing.
Mm.
think that may help. It helps me, but it may help other people as well.
Yeah.
I think Sri is coming from a trade plan where he needs to find out what do I need in order to get into a trade. That's where I think Sri is coming from. And if that is where he's coming from, then that may help him.
Thank you so much, Selvan. Sri, did you heard what Selvan said?
Yeah, I heard.
I
Thanks,
I, I
Selvan.
wrote I
Thanks for
wrote
sharing.
I wrote it down for you. So what is saying? You need to first decide on the trend whether it is uptrend based on your criteria of Morningstar or means candlesticks and Fibonacci, or if it is a downtrend based on again on Fibonacci or candlesticks or whatever it is. Then if the answer is up, then you need to see another. You need to ask another question: is there a support? Where from I should get along? If the answer is down, then your next question is whether the resistance is there or not, and where from I should take the short. Is it correct interpretation, Selvan?
Very correct.
Sri, did you have any? Do you have any question on Selvan?
No. Thanks, Selvan. Thanks,
No, you're welcome. Most welcome, man.
Did most importantly, did it answer your question, Sri? We both of us tried.
Yeah, I
What do you
got it.
think? What do you think? What is your interpretation out of this two?
Now, it's important is go and get the numbers. I mean, through the back testing. That's the first thing. Once we get that numbers, then try and stick to the consistency plan. If it is, I mean, if it is success trade, then stick to that plan.
That's what you said.
Yeah.
So first you need to decide the criteria. Based on the back testing, you decide the success rate of those criteria. And if you say A is the criteria which is B success, and I'm happy with A multiplied by B, or A with B, then I will repeat consistently A with B and stick to the plan of trading A with B for the rest of my life.
Yeah.
Yeah, absolutely
That's
correct. Absolutely correct. Yeah, very well understood. Yeah, thank you, Selvan, and thank you, Sri. And fantastic. And Binod, you want to add anything on Sri's question? Binod, we came late. You want to add anything? Your mic working, Binod? Binod saying agree with Sri. Yeah. Sri, did it help you this discussion?
Yeah. Very much. Thank you.
Does it answer your question, or you are just satisfying to both of us?
No. I sort of expected the similar answer, but I know what's my issue, and basically,
What is your
first
issue?
issue is what do you call it? Criteria. I'm still struggling to understand the trade setups. That I made a couple of mistakes. Mistakes while taking the trades, and that, I mean, of course, I deviated from my trade plan. That's where I'm asking, because I supposed to take my profit at 61.8%. There was no signal to take the profit. I waited, and I was on a two-day trade, and failed to monitor on a daily what's happening with the signal. And when I came to two-day trade, two-day bar, it was already taken off. So that's where I was asking. That's what it triggered me to ask this question. The trade plan, yes, my trade plan says that it's 61.8. to come out, but there was no. I was working through this one bar taken out, one bar, two bar theory, and there was no signal. There was no indication to close this trade. And even though my my gut feeling was to close at 61.8, but I was referring to the 2 day chart, and in the daily I failed to see that downtrend. See that reversal, and I waited for the 2 day chart, and it was already too late. It was taken off. That's why that has driven me to ask this question, sir.
Partha, can I contribute here?
Yes, please.
Sri, if you are trading to the 61.8, that means you're trading Fibonacci to, you're trading a retracement.
Yeah.
In your retracements, my suggestion to you is always put a take profit, whether it's 61.8 or 50%, 38, 78 points, or anywhere, put a take profit. If you think it's going to get to the 61.8, market may spike there and suddenly go back up. So put your take profit at 10 pips before the 61.8, especially if it's retracement. Had you had a take profit at that point and not waited for the market to turn and go back, you would have succeeded in winning that. So you must put your take profit in, whether it's whatever level you think it's going to go to, you must have a take profit in at that level. If it goes past that level, well and good. But if it doesn't go past that level and it spikes there and it goes back, well, your trade closed and you're in the profit. That is my contribution to you.
Okay. Thank you.
Thanks, Selvan. And what was that trade, Sri, which were you referring to?
That was I'll just open up.
Hmm?
It was HG.
High grade copper.
Yeah, I get so.
And what date?
Just need to open up my Just give me 1 second.
Yeah.
Yeah, that was on 27th.
27th of?
22nd of July.
22nd of July. What did you do?
I entered a long.
You entered long on 22nd of July. On symbol or what? Signal or what? Signal. 22nd.
Yeah, on
Huh? On 2-day signal. There was no 20-day signal.
there was no signal. I on 22nd it's a turning point, and
when? No. Where is the turning point? There is no turning point here. The close is not below this low. Even short or long?
I went long.
Long.
I went long. Yeah.
You went long on 22nd July.
No, entry was the previous year. Just could you go to this level swing low, please, sir?
Huh?
Swing low here. Previous swing low.
This one.
No, previous swing low.
This one.
No, it's on
8th of July or these are the swing
previous.
lows. Huh?
Yeah, no, come back again, please. Come back. Yeah, so that swing low,
Yeah.
and that's the turning point. Then high was taken out.
Then?
Yeah, this one.
So you went long?
I went long here, yeah.
Then?
I went long here.
How did you manage this trade? When you went long, you did see the Bollinger, yeah? In a downtrend, if it is touching for the first time, second time Bollinger, it can be reversal, yeah?
I saw this Bollinger, and I also saw this big bar, and I stayed in there only, because thinking that it will go up.
Thinking. Okay.
Yeah.
Yes, thinking can be critical, yeah? Go.
Thinking is very dangerous.
Yeah, because you don't know what to think. Alright, then.
Yeah, that's right. So I waited and waited.
Yeah.
I was wait up to the second, how much? 28th of July.
Up to this point, okay.
To close the trade.
You closed with a profit.
Yeah,
Small profit.
Small profit.
Zero profit, yeah.
Yeah, small profit.
Okay. Brother, I just want to know, how did we work out, Sri? How did you work out 61.8? From where to where you're working 61.8?
I was working from here. What is that? 50th.
Date?
25th of May.
This one here.
Right.
25th.
So draw that fib, Father.
So no, let me first understand. 25th of May.
Yeah.
This one.
Yeah.
And from this low of 23rd May
to the
to the high of
no, the low of this one. Low of the first bar, so 6th.
Okay, therein lies your problem.
Here.
That's where your problem is.
No. The next one. The next swing low. Yeah. That one. Yes.
So you have drawn a Fibonacci of this to see the extension, is it?
Yeah.
Oh no, that's a wrong Fibonacci.
There's your problem.
Yeah, Sylvan.
There's your problem there. You cannot draw the Fibonacci from there.
Yeah, absolutely. Low to low, you never join.
A fib is from the highest point to the lowest point.
High. I mean, where is this? 25th of May.
25th of May is here. To
27th of May.
No, I think that's a mistake. Yeah, Sullivan, you want to add?
Yeah, you need to draw a fib from the highest point to the lowest.
Here to here.
Well, I think the previous swing low was a lower pattern. That one was the low point.
It stopped at 50% exactly.
Yeah. That's where I say, it have to pass the 38.2.
Yes.
So you in a retracement, 1% is ample. 38.2% is more than 1%.
This is 38.2. Yeah.
So had you taken that trade, you'd have made your 1% and got out.
And sir, this Fibonacci is correct. Yeah, and this is what I have drawn. Right, and I enter the trade here on 10th of July. Yeah. Then it has bounced. It has bounced from the 50%. So this is where I was expecting. I mean, because it made a double bottom here. So that's what I was expecting. Anyway, I,
Yeah.
I knew the mistake. I mean, I understood the mistake now.
I think there are a couple of challenges in this trade which you said. The first one is the selection criteria of the starting point of the fib and the end point of the fib is not correct. You cannot join Fibonacci from anywhere to anywhere. You have to be go to a meaningful peaks and drops to join, and before we join Fibonacci we need to ask ourselves why we are doing the Fibonacci. So if you are seeking for a Fibonacci retracement up to this level of 61.8 or 50.8, you must draw this Fibonacci from here to here to take profit at 61.8 or 50%. If you are drawing the Fibonacci from 27th of May to this point, I think that's a wrong one. That is valid, still valid, provided you have, for example, let's draw that one. What you have drawn.
No, I mean,
Uh,
what we
yes,
drawn now, that's the correct one. That's what I have drawn.
but you said 27th of May, which
I
is this
think,
one. You got mixed up, is it?
yeah. I mean, I was referring to this point, but
Alright,
so
okay,
this,
no, that's fine. If
just,
you
just
no, that's fine. If you have drawn that Fibonacci, that's fine, fantastic, brilliant. Yeah, that's the
that,
correct Fibonacci. But
yeah,
you
yeah.
show,
This is the one from
yeah,
here
no,
to here. Yes.
yeah, that's fine. Alright, that's fine.
Then my point about it doesn't always go to the 61.8.
No,
It can spike and go back.
yeah,
So yeah, it spiked to the 50 and then went back.
yeah.
That's why your take profit must be wherever you think it's going to go to.
So if you are not taking the pro one, not watching the market and closing the trade here on the 50%, which is 27,986, because you were in the office, what you must do is close below. And remember, this is a 2-day chart. So
Mm.
if you bring it to 1-day chart, for example, so in 1 day close at 405, 27,405, and 2-day closed at 405, same day. So if you are entering at this point of 26,995, you must close the trade at this fellow, because it touched, spiked, as Selman said, 50%, and it closed below the Fibonacci 50% and 38, if you can see 518 and 986. Not only those two Fibonacci, but also the most important to me is closing below the Bollinger Band, and this is the second touch of the Bollinger Band. First touch is here. So if you have taken the trade, fine, fantastic, but you must close the trade here with a profit of, I think, you don't add the ESD, then there is nothing. If you take this high, at least you get a profit of 300 out of 406 pips, 16 pips. But you waited till here and you got, I don't know, if you have added the ESD, you get nothing. If you have not added the ESD entry distance, then you get 210 pips. But most important thing is to get out here. I think that's the consistency. Consistently, if you are getting out here, write down the consistency where you are getting out, what why you are getting, where you are getting out. I think that is the most important one, and you must know this. Yeah, what is the percentage of all buyers out, sellers out, getting out? What is the percentage of take profit getting out? What is the percentage of high low taking out, and so on and so forth. Once you know this, you would not move out of this 4, because this 4 is actually given us a good result in last whatever years you are doing. Make sense?
Beautiful. Thank you very much.
Fantastic. Thank you, Sylvan. And any other question?
No, I'm good with question.
Any other question, Vinod, Sylvan?
No, I don't have any questions,
If not,
brother.
thank you so much for your time. And Vinod says no, and thank you all. And you have the good night, and then see you. Talk to you in a month time.
Good
Bye
night.
for
Thank
now.
you. Thanks very much.
Thank you.
Thanks,
Thanks, everyone.
Selvan.
Thank you.
Bye.
Thanks and
Thanks.
bye.
Thanks. Bye.